Good morning, everybody. Welcome to the Flow Show. Nice quiet one this morning. Hope you're doing well. Morning, Kay. You still awake?
Good morning, Ryan. Oh, yeah. I went for a couple of hours keep after the Bank of Japan, so I feel relatively fresh. Let's see how it goes in a couple of hours. No guarantee.
Yeah. Yeah, I'm wondering if I should have done the same. I batted on through. And yeah, I'll let you know now how I feel. But obviously, that's the big topic to talk about today, which we shall do so. But before that, we'll just get through some of the other headlines and whatnot. Over in China, their foreign minister has been on a visit to New Zealand, saying that China is ready to work with the Kiwis to implement an upgraded version of the China-New Zealand Free Trade Agreement. So hot on the heels on improving relations with Australia, they're now looking to do so with New Zealand as well. Speaking of the RBA, they had a meeting today, not that you may have noticed, given the furore around the BOJ, but they left their rate unchanged, and there was a slight dovish tilt to the statement. In their prior statement, they had the line, and a further increase in interest rates cannot be ruled out. They changed that to the board is not ruling anything in or out. But they took out language talking interest rate hikes or increases, just made it more of a coin toss. It doesn't really change the rhetoric too much, but it just, in the market's eyes, pushes the increases out the picture for now. RBA's Bullock said that we are making progress in the fight against inflation, and that the rate path will return CPI to target, though that remains uncertain. The war isn't yet won on inflation, and the change in statement language is in response to the data. And they're not confident enough they can say they can rule out more hikes. The board see risks on both sides for policy and need to be much more confident on inflation before thinking about rate cuts, taking a line there from everybody else about confidence in that. SMB might have to wait till at least June before cutting rates modestly. That's according to some 80% of economists. 25 out of 32 in a poll last week said they will hold the policy rate unchanged 1.75% this week. You got early expectations for the SMB, mate?
Yep, I mentioned that on yesterday's Flow show as well. 25-30% priced in for a cut this month. I think personally the risk is slightly higher, because there is quite a bit of pressure still from corporate Switzerland on the one hand, also with the hints that Jordan gave us. Agreed, the Swiss has already corrected a lot from the end of last year, but there's still some pressures out of corporate Switzerland. I think they were a little bit in shock with the way the Swiss franc really appreciated at the end of last year. Corrected somewhat, well, corrected quite a bit. I think we are close to somewhere 61.8 or so of those moves in most pairs. But yeah, I'd say the risk is slightly higher, especially because they have a meeting only every quarter. So it depends. It's going to depend what kind of signal they want to send, right? Do they go? We agree with corporate Switzerland. We need to. Our data have been a little bit sluggish. CPI has come off quite well. In the meantime, we are closer to 1% than the 2% limit. So to me personally, there is a bit of a higher chance, but yeah, I wouldn't call it 60-40, but there is a decent chance that they do something at this meeting.
Yeah, thank you very much, mate. I thought you might be all over it.
Yeah, still have positions running, you know. I need to talk my book. If I don't talk my book, who else is going to do it?
Exactly. Oh, we should have been authors, the way we talk our books. Anyway, over to the Bank of England, and the BOE is going to they call it reappointing, but they're going to extend Catherine Mann's stint at the BOE through to 2027. Mann, one of the hawks on the board at the moment. That's obviously up for discussion later this week with the BOE meeting coming up there. Bit of data out this morning. A few numbers out of the Eurozone and Germany. We had, where we gone? We've had the zoo numbers out this morning. Germany zoo showing a better improvement. I mean, still huge negative number, but was expected to get worse. It actually got better, minus 80.5. That's for current conditions. Economic sentiment overall improving to 31.7. So maybe those, well, it will need to translate into actual green shoots. All right, sentiment improving, but it needs to turn into actual activity improvement. There was some news for the ECB as well. Wage numbers, part and parcel of their package of what they look for in terms of judging inflation and the like. Wages came down to 3.1% from 5.2 previously. Labour costs overall 3.4%, also from 5.2. So that went better for the ECB as well. Well, you can say better. They won't want to see wages falling because decent wages is obviously a sign of decent activity. So it's one of those, don't be careful what you wish for. But then the numbers coming down. The Eurozone zoo number as well, also showing a bit of an improvement there. ECB Centeno said reducing the main rate may help avoid a recession. Over in the US, politicians have apparently finally again reached a funding deal to put off the shutdown. Can get kicked once more. Right, let's do it. BOJ, after years and years and years and years, and particularly those who've been following the Flow Show for the last couple of years know we've been talking about this. Finally pulled the trigger and they hiked their rate, ended negative interest rate policy, hiked by 10 pips as expected. Well, they moved the range up. Let's call it that. The range was minus 0.1% to 0%. Now it's 0% to plus 0.1%. They got rid of YCC yield curve control. They officially ended ETF buying and rate purchases as well. However, they said they will continue with JGB buying in broadly the same amounts as before. So they're not going to stop buying JGBs. The reasons for acting now is that they saw the price target in sight, but they expect to maintain a accommodative monetary environment for the time being. They say the year-on-year increase in CPI is likely to be above 2% through the fiscal year 2024. However, they did downgrade their assessment of consumer spending and production. Now, BOJ's leader was out in his presser afterwards, saying that they felt they confirmed the virtuous cycle of wages and prices, and that the policy framework of QQE with YCC and negative rates had fulfilled their roles. That accommodative financial conditions will be maintained for the time being, and that they will consider options for easing, broadly included ones used in the past if needed. And they will carry out regular monetary policy for that. I say the possibility of achieving a sustained, stable 2% target is not 100%, but is rising. We have come to a phase where we can slowly proceed with possible rate hikes, which he thinks is appropriate. If the price outlook overshoots or shows a possibility of overshooting, that could lead to a change in monetary policy. They're not thinking about telling the definitive upper yield cap to the market operations division. Okay, so talking about where they're going to let yield go to. YCC gone, but they're not going to put any sort of limit on it. They will consider a monetary policy response if currencies cause a big impact on the economy and prices. They said next month's outlook report will take it into consideration. and that was when he was asked if wage hikes will lead to higher underlying inflation and an early additional rate hike. So they don't have a preconceived notion on which would come first, the reduction of bond buying or rate hikes. So let's quickly go through it, okay? Context first, okay? They haven't started on a tightening cycle. They've ended their easing cycle. Well, they've only half ended their easing cycle because they're still buying JGBs, but they've ended a lot of their policies to do with easing. So they've got themselves to break even, if you like, to flat, okay, on their monetary policy. The next step is whether they're going to start tightening properly. Now, the statement had no forward guidance at all. None of what we heard from Ueda afterwards. And he started off keeping on the easy side by saying that they're going to keep buying JGBs, so on and so forth. Then he went into a little bit about, you know, potentially and pathways to hiking, but it was all maybes, possiblies, and you know, one could say maybe a little bit flaky about giving any real guidance on that. So overall, we had it pretty much right. It turned into a buy rumour, sell fact. Dollar yen was trading around 149 2030s, and we just about got to 149 on the announcement, and then it was uphill ever since. So a lot of the market were coming around to the same way of thinking as we've been for the last couple of months, that this was going to turn into a buy rumour, sell fact event. The question is, what happens from here on out? Okay, what's your view on that, mate?
Hey, come on, you did all the easy work and now you're asking me the question. Look, when we listened to the press conference afterwards, it was like, from any other central banker, we may have spotted some hawkishness in there, in a way, not ruling out anything, but coming and translating from Japanese, really. Yeah, they haven't embarked on any major hiking cycle either. Regarding the JGBs, and I'm very fortunate that we found some Japanese firms commenting on it, because, as I said, it's sometimes very hard to really put in English and understand in another language than Japanese when they really say something, what they actually mean. Yeah, I mean, it's still somewhere underwhelming in a way that those Japanese firms understanding exactly what he meant, seemingly thinking that they may not even be any more rate hikes this year, which to me would be a little surprising. If we get confirmation that wages are going into positive territory, they may add a bit, but we're absolutely back to where we were, and what we were saying is that it's going to be one very slow process. The ETF suppression is a cosmetic thing because they haven't been buying any ETFs for over a year. The YCC, they have seen what the JGBs are doing. They have heard the comments from the whales, the Japanese investors, and everything. They don't really need to continue it. And then on the JGB buying front, they are matching right now, as I've been saying. They are matching the maturities that we are going to have in the next year. So they're not doing less nor more. So there is no additional easing in from that side. But they clearly left the door open, and they actually did it yesterday overnight. So the day before the meeting, and I spoke about it on the Flow Show, they actually bought 3 trillion yen of JGBs, which is somewhere half a month of planned JGB buying going forward, which is not negligible. So then we saw the reaction on the JGB front in the market. The Japanese market is all but impressed about it all, and then we had this reaction on the yen. I'm going to say, to be honest, I thought on the announcement we would have a bit more impact than what we had. Okay, especially seeing how it had been traded before when we had the hints at what they wanted to do. The reaction there, those 20 pips lower and then shooting higher. I personally was, I must say, a bit surprised about it. And but we were up for it, and people in our room know what we did afterwards. Something that doesn't go down is usually only one way, and the market was probably well positioned already for it to happen. And we see a continuation of that this morning. And there's one particular cross that has really moved quite a bit this morning, and that's Swiss yen. And I mean, a lot of people were or are perhaps still short Swiss yen on the combination of Bank of Japan changing and SNB perhaps doing something. And that little baby has jumped quite a bit today as well from where we can see those sub 168 levels. We are now trading well back up in the 169 level. That's one of the particular crosses that's been trading quite actively ahead of that combination, Bank of Japan, SMB, and those people seem to be forced out of at least parts of their positions. Now, I guess some will still hold some kind of Swiss short positions in case SMB moves. I am keeping some, but I'm not for sure not going to do it against the yen. So to me, coming out of the Bank of Japan, they officialized I think they canceled the tiering system, and they are now going to pay 10 BPs. Some of the tiering system was already -10 flat and 10 BPs. Now they just put it at 10 BPs, okay? And then they're going to use that overnight call rate to fix the daily rate, which is going to be anywhere between 0 and 10 BPs. And yeah, that's where we are. Interest rate differentials remain, especially as we've seen those dollar yields pulling higher. So there's not a lot of reasons again to stay long yen for longer. I'm just continuing to sing the same song, and it's just a fact, you know. If you're long yen, you're paying funding away, and that's a simple thing. And now we have to. What I would say though, and I said it yesterday too, watch what's going to happen now during the Japanese sessions, because we are in fiscal year end, okay? End of March is fiscal year end. So the Japanese sessions can look different than what the rest of the world is going to do with this, okay? But pay attention to what's happening in the Japanese session, because it's going to give us a hint at what the Japanese corporates, Japanese insurers, JPIF, if they need to rebalance stuff for the end of their fiscal year, that's going to impact trading in the Japanese sessions, okay? But the immediate reaction was shrugging shoulders. We've had it, and now we move on, okay?
Yeah, very much. I think it's particularly for the rest of this week, well, at least till Wednesday, it's going to be a case of you have to take each side of the pair as importance on its own merits. You know, as Kay says, when we're in the Asia session, we're going to see a lot of influence going into yen pairs because of flows and people changing around, you know, investment plans and ideas and whatever. And then it's going to switch back when we get into the US session, because we've got the Fed coming up, and that's a big risk event as well. So you need to be very careful when you're trading the yen, if you didn't know that already. Just because we may be over the Bank of Japan, but there's still going to be there's a lot we don't know about what's going to happen, like with the Japanese whales, like with foreign investors and the like. You know, we saw the Nikkei going to the moon previously. Is that going to continue, or is everyone now taking profit and you know, moving on? So there's probably going to be a few more sessions that before things start to, or before we can get a real idea of what's going to happen. But even then, as Kay says, we've got fiscal year end, so we might have to wait until we cross that bridge before we get anywhere. Yeah, you know, I'm going to give ourselves a pat on the back here, because we've been talking about this for 2 years now. You know, both Kay and I thought that maybe we'd get a bit more last year in terms of when they were going to go, but they decided to long it out in Japanese way. But, you know, I'm not saying this, you know, for plaudits or anything like that. You know, this is the way we trade. This is what we're trying to do on this flow show is not just talk on a show and then turn around and say, hey, look how good we were. We're doing this every day for our own trading. Okay. We've traded this all the way through, be it on one side or the other, as the news and headlines and conditions dictate. You know, we've tried short yen pairs, we've been long yen pairs. We've reacted before, we reacted after. You know, this whole situation, as I say, we've pretty much nailed, you know, I would say probably 90% of the reaction and when things are turning and when the market's done one thing on expectations, done another thing on expectations. You know, we've been saying it's going to be a buy, rumor, sell, fact trade. Well, there's your evidence. Okay. So this is why it's important to learn how these markets work. You know, we're not geniuses. We've just got experience. We've seen this time and time again. We know when a price has priced in something and when it's not priced in something. Hence why, you know, both of us were expecting a far more deeper drop on the confirmation move, because it's all right, rumors, sources and everything else, but you still need that confirmation. But that 20 pip move there, that was very underwhelming. But then, as Kay says, you react to that. As traders, you have to react to it. Why hasn't it not? Why have yen pairs not strengthened on the back of the Bank of Japan finally ending negative rates after 16 odd years? The price ain't going to do what you expect. It can only do the other thing, and that's the opposite. So, yeah, I'm going to give us a pat on the back. Say it's not just to say we're all brilliant, but because we're trying to teach you guys and girls this as well, how to read markets, learn what the news headlines say. You know, we had one of the guys coming in the room this morning. Why hasn't yen strengthened on the back of the Bank of Japan? Well, because all we heard for the last 2 weeks is what they were going to do, and we knew what they were going to do, and the sources pieces said what they were going to do, and today they did what they were going to do. So how much can the market wring out of that in the price? And it hasn't. What it does from here, that's another question, and that's something we'll have to talk about over the days ahead. But yes, pats on the back for you, K-Man, I've got to say, because you know, we've been all over this, not just us, but other people in the room as well. And yeah, it's a little bit of history here today for everybody.
Yeah.
Finally a turn, you know.
Yeah, I was surprised it was only 17 years ago since they raised rates last time. It felt like a quarter of a century. But yeah, I mean, that's the thing. And that's also where I'm saying, I mean, it's not only good to look at some pretty pictures. You have to learn and understand what's going on the other side as well. The reactions, the fundamentals behind the stuff as well. We've been saying for a long time. It's still hurting to stay long, or it's costing money to stay long yen for longer. So if you're long yen, you need to be right relatively quickly, and we've seen it again. The people were thinking, like, when the Bank of Japan came out, was like, okay, we're long yen on the back of it. That's the reaction. And immediately some probably speculative or species who were long yen went like, oh, this is not the reaction we expected, same as we did. And then they just went the other way around. They needed to cover, basically. Yeah, I'm still in the same, actually exactly the same view as I was before the meeting. Again, I'm surprised not to have seen a bigger reaction on the fact. But that tells us where the market positioning is, and now we have another month to wait and look at the other side of whatever yen pairs are going to do, and especially the FOMC coming up. That's going to be a big one. Imagine that those dots move up a little bit. It could create another wave of dollar yen buying and other dollars buying as well, but dollar yen buying too, because we have to wait for another month before the next meeting comes around, and then we will be in the start of the fiscal year as well. I wonder if those people are going to get fresh investments, and are they willing to park it in Japan at 0.10-year JGBs at 0.73 right now? Are they willing to park it there? Or if the US yields are trading at 430, 440, are they going to park it there? That's going to be another question as well. I put again to my head, I think dollar yen has more chances to trade at 155 than 145.
Yeah, I think so too. And unless it's something that comes from the Fed. Gav, thanks for your comment there. You know, the real pat on the back is if people here who are following the show see this, learn from it, and apply it to their trading going forward. You know, a lot of people don't understand, you know, the relationship between headlines and markets and price moves or whatever. So if people are learning from this, that's job done for us. That's job done. You know, that's what we're here for, to help you get through, guide you through these things, so that you know, when the situation arises again, you know how to react, and you don't need to, you know, to come to us and ask. You've learned, you've got the experience there. But for me, yeah, I mean, I don't know whether that, on balance, I think yeah, we'd probably see dollar yen higher more than lower. But you know, now it comes down to a question of what does the market want to do with this? Okay, we've got levels in play. You know, they wouldn't have counted for nothing over the announcement and UADA, but you know, here we are already running into a bit of trouble up at the former highs, around the high 150s. You know, so now we can maybe have a bit of conviction now in the levels after we've got over all the headlines, and that's where I'm looking at now. These highs into 151. You know, we bumped our head on there through most of February, and it looks like we might be doing so again. If we get above there, then all eyes are going to be on the big 152 level. And what do we do there? Is that where perhaps Suzuki and Co., who's been watching very carefully as well,
He must have
said,
been, he must have been praying for during the press conference. He made a press conference saying like, please be hawkish, because he said something during the night as well, saying that he still refuses to call the end of deflation. That was like
yeah,
one big hint, saying like, don't go and sell too much yen here, please.
yeah, exactly. And you know, maybe they have been doing a bit of smoothing. You know, they would have known this was coming. They all talk with each other, and it's the Ministry of Finance who, you know, who is in charge of saying, you know, intervene or whatever. So maybe you know, it's probably a, I don't know, 10% chance that they may have been in smoothing, maybe just selling a bit to stop anything real big happening. But you know, if we get up to 152, they've intervened twice up there now, in and around that area. So the market's going to be focusing on that level if we get up there. So we're probably going to find a bit of front running coming into that level anyway. And it is a you know, potential triple, or would be a potential triple top.
And the speed, huh? The speed.
Yeah.
I'm always thinking back at what Kuroda said. He says 200-300 points in a session, but he did say for a couple of consecutive sessions. That's too much. If you go up to 152, that's 300 points from the lows. There's your risk coming up, right?
Yeah. Yeah. Very
I'm
much
saying
so.
they will, but there's your risk coming up. That's a fact.
Yeah. And yeah, so it's just a question of how it gets there, really. I mean, if we creep up there, well, maybe that's a different story, but we'll find out one way or another whether they've defined 152 as a level for them. They never put a number on it, but as I say, in and around there, we've had intervention twice. So I was suspicious this last time that they maybe have drawn a bit of a line on that number, but if we get up there, we shall see. But on the other side, you know, we've got the Fed coming up. Are we in dip buying mode now? You know, if the Fed's a little bit non-hawkish, shall we say, if they're, you know, finally putting a date on a potential cut and seeing some sort of worries or whatever, are we going to find dips built up? You know, this 148, 85, 149 area is going to be our closest support point for any big news. So below that is the 147, 146 and a half. You know, that's where we couldn't get through despite all the sources pieces that were dropping around there. So that's the range I'm watching at. This inside range, 150.80s, 148.80s, 90s, 149, and then a wider range, 152 and down to 147, 146.5. If we're outside of those ranges at the end of the week, then the market is doing something, and then we need to think about where we're going from there. Obviously
There's some
below
risk.
140. Sorry, mate.
There's some risk that it would happen, and if it would happen to the top side over the FOMC, there's a bit of risk of an acceleration. Imagine those dot plots coming up a little bit, because okay, I'm front running the tomorrow show probably, but imagine those dots coming up a little bit. It may just put the accelerator on everything dollar, and then dollar yen will probably be one that the people will be watching and trying to take through that 152 perhaps even.
Yeah, very much so. Gav is quite correct. There's probably a ton of stops. There's probably a ton of stops above 152, and there's probably a few now down here.
Knockouts as well, because we never traded the 152. Huh?
Yeah, exactly. Yeah, we'd probably Barry's still up there as well. We knew Barry's up there a while back, and we haven't traded the figure, so yeah, they're probably still in play as well. So yeah, I mean, I like to look at a clean chart now and again. Just come up to one of my nice big wide charts. If we threw 152 up here, we're potentially looking at 160 on a technical basis.
In between, but 54 and 55, but those are like extension levels, technical levels, and on the FOMC, I'm not sure if they survive. Well, I mean, the 154, 155 is still a while away, but
yeah,
said, imagine, and I don't know what's going to happen over the fiscal year end again. I've heard some rumors that Japanese exporters have been layering offers, but they're getting paid out of all their offers, so a bit easily, I think, as well, because that's been going on for two big figures now. And imagine that they are done. I don't know where we end the fiscal year on next week,
Yeah, very much so. So, now we're into that part of the show where we just need maybe a bit of price discovery. So don't have too much of a bias in anything yen led at the moment, because we don't know where it's all going to settle out. Right, let's move on from the BOJ while Kate can pick up any other yen pairs when I hand the reins over to him. But doesn't seem like there's an awful lot going on elsewhere, mate, at the moment. I was saying towards the latter part of last week that it looked like the dollar was sort of getting its mojo back, probably just as we move into that Fed orbit for this week. The market switching from trading ECB and everything else to getting stuck into the rest of them, into the FOMC. Euro dollar, it's briefly held at the top of or was holding at the 108.70s. Now we're through that zone. Just some potential indicators that we're now finding it resistance again. And as we come down to the bottom of the zone, we're just finding a little bit of support into it. So this is still your sort of pivot area, what it wants to do here. We get below 108.30, hold below, then we're probably heading a bit lower. Vice versa, get back above 108.70 just to keep this move in play that we've seen for the last, pretty much all year so far. So I haven't got my fibs on, I need to stick my fibs on. But we are breaking down the 50 fib, I think, comes in around that 108 area, doesn't it, Kay? Let me stop being lazy one. Draw it on there.
Question, yeah, exactly, just below 107.90s or so.
Yeah, let me just whack it on there quickly. There we go.
That one. Yeah, no, that's a bit higher. That's around where we are.
Yeah, around about where we are now. I need to tidy up.
Yeah.
So this one again. Where's it going to? I'm still itching or siding with a fading dollar strength at the moment over the FOMC. I think if the market's getting too hawkish for them, they're going to be wrong. I think there's we've been speaking about a few worries that I've had, at least, about the consumers, just some early signs that things may be wobbling a bit. So I'm thinking the market may get a bit out its pram. And if the Fed mentioned that, again, just front running the Fed, we haven't really got, no one's really put a date on it. We've had half-assed talk about the dates, but it's not like the ECB, is it, Kay, where, after council are going, June. I think, is that the risk that they finally actually put a date on it and give us something?
Yeah, the market, just because there were enough hints, to talk about June, to at least brush March off the table, and May as well, because we have a meeting in May. Perhaps we are going to have a little more about that. But as I said, I think the real risk in the FOMC, and that will likely give another push to the dollar higher, is those dots. If they start to show less than perhaps a bit less than 3 cuts this year, and especially I would say the 2025 dots are going to come into play as well, because the market is like thinking about 100 BPs or even some 125 BPs in 2025. Imagine that those dots going below 100, that would give another push in the back of the dollar. But yeah, I don't know if Powell actually, because Powell has been always walking the fine line, talking both sides of the spectrum. He may start with saying that there's a bit of risk building. We see the wage indicator, the labor cost indicators coming off, this and that, and then going back to the other side, that the situation is was a bit loose, and the jobs market is still printing very high numbers. So he's probably going to walk both sides again, and then perhaps leave the market guessing once more, whether it's whether June is the date. But how it trades right now is really June, right? June is going to be the month where everything happens.
Yeah, exactly. We'll talk about it more tomorrow, obviously, ahead of the Fed. But the dots is right, and I think the longer run dot plot is going to be important. It's not one that many people look at. It's usually like the front 2 months. So they do 24, 25, 26 dots, but then there's a column at the end for longer run. And that, Mester mentioned it a week or so ago about how she might move her dot up there, which then is potentially going to be looked at as to where the neutral rate's going to be, whether it's going to be much higher than it was previously, which is what expected. There's going to be lots to look at, but we can do that tomorrow in more detail. One thing I want to point out is this could be another big moment for euro sterling in this 85 level. We've got UK inflation out tomorrow morning, which is obviously ahead of the BOE on Thursday. We're expecting inflation to drop 5 points a piece, which is quite a chunky drop. Obviously, depending on how that comes out, is going to change the last minute thoughts about what the BOE may do. Is it going to be a higher for longer message if inflation's more sticky, or if it comes down more than expected? Are they also going to start hinting at a date for a potential rate cut? So it's going to be a big one for euro sterling. We've had these bounces off of the level, but it's not got far. 85, 70s, 80s. That's it. This is very, very weak price action off a big level like this. When you look back, you can see how significant the bounces have been off this level. We're not talking small beans here, 200-300 pips. And that's going back a hell of a long way. The bounces, boom. Big numbers, big moves, but this is very weak price action.
I think tomorrow's data may be more important even than the BOE the day after.
Yeah, I was talking with Michael Brown this morning, and he pointed out a piece from Morgan Stanley saying the same thing, that Wednesday is probably more important than Thursday.
No, I haven't seen the piece, but I think it could be pretty decisive for sterling, and as I said, even more than BOE. Let's not forget that Bailey is somewhere hidden dove as well, right? He hasn't been showing it too much of late because of the stickiness of inflation and things like that. But he is a bit of a hidden dove, and if that inflation prints low, uh, just people in the room know that I've been having like Swiss positions, but this morning I reduced my sterling Swiss because of that tomorrow stuff, you know. I really think it could be more important than the BOE.
Yeah, exactly. And I've been talking about it for the last few days, but I'm gonna start managing my position. I'm still long, and I'm gonna stick my stop reverses in now, because I think if it's a hot number tomorrow,
Yeah,
then I think we're probably gonna bust the level.
yeah.
And if it's a cool number, you know, we're at least going to test 85.70s. I wouldn't be surprised if we're up testing this 86.20 zone on that. But I'm always cautious about where I'm positioned. I'm long, so that's my main concern. So I'm going to be dropping in some reverses.
And I'm the
To go
other side, and I'm equally concerned and wondering. This is,
well,
but this is a case. This is a typical case for everybody who listens, where I've been right on the sterling Swiss. Ryan is right on the euro sterling, but now we are facing a possible event that makes both of us on each end of the spectrum think about what's the possibility. So what are we doing? We are looking at the risk that we are carrying. And like me, for instance, this morning, nice little level on all the Swiss pairs. Been reducing some of my positions, especially on the sterling Swiss, because there is a big risk event for either side of the market tomorrow. So that is something for all our listeners, which is important. You can be long or short. You can both actually be right at various times, because depending on the currency you're trading against it, it can be a very good trade for either of us. And then, but now we need to pay attention and be a bit careful.
yeah, very well said, mate. Absolutely spot on with that. Trading is all about knowing where your risk is. Profits are fine if it's going the right way. It's all jelly and ice cream. But you have to think about if it doesn't go your way. If you are going to be wrong, and how to manage that. So yeah, very good comments, Mr. K-Man. Right, let's hand it over to you, because I'm sure you've got plenty to show us, particularly in those yen pairs, which I know you'll have your BDI on.
Well, actually, the first one that I'm going to show here is the Aussie after the RBA. So yesterday I was saying on the shows, I think there's a little bit of a risk. The whole market is thinking like very neutral. Bullock has the name of being a bit more bullish than her predecessor, and the market actually. And I said too complacent. I'm not sure whether complacent was the right word, but we have seen that they have taken out some of their hawkish lines. She was still trying over the presser to be half dovish or half hawkish perhaps, but the market didn't buy anything. So as I told you over the past meetings, watch this cloud here coming down, and we refused to close inside, okay, over the past session. So this is what happened. We were trading actually right around there at the opening of the RBA press conference on the statement as well. And as everybody knows by now, this 65, 25, 40 has been a really decent zone to monitor, okay? And now I'm going on to the shorter time frame, and we are through. So what happened? We had this end of year, we went back up here, and then I said, like, watch out what's happening around 66. Here, that's the day we fell out of the cloud as well. And I said, like, well, that's a bit of a risk building here. And that's then what happened over the RBA. And we are, as you can see, this zone really has been traded every time. Top here, top there. Traffic zone, traffic zone, traffic zone, you name it, traffic zone all around. So this is now your zone that you need to monitor. Okay, and if I'd say if it goes above before the FOMC. It may be that the market is taking some Aussie off and stuff. I'm going to look where we are. I've sold it yesterday. Not yesterday? No, a few hours ago. I've sold a few out. We went through the zone, starting to scale back, which I usually do. I like the slice and dice approach. Now we are watching the 65 to figure. Okay, my risk is now already contained, all right? Even if it goes back above 65.70, I should be all right. But this is now the area that I'm going to watch even post FOMC. Where are we once we come out of the FOMC tomorrow, all right? And on the other, and then above there is going to be the closest one around 65.70, 70.75. That's what I'm looking now. If it goes according to plan and we start to break sub 65, then we can finally have a look at those low 64s, in my opinion. Perhaps even have a revisit of that low here in the 64.40 zone. Okay, that is how I look at the Aussie right now. It does look a bit fragile. All right. Well, the rest of the yen pairs, the dollar yen, nothing new. 150.80, okay. So that's your 152. And then above there, extensions around 155. There's a 154 as well in there somewhere, but perhaps other people can comment on that. Euro yen. Yeah, we are nearly back there. It's roughly the dollar yen. It's an overlay of the dollar yen. I know the euro dollar is a bit lower now, but it's roughly an overlay of the dollar yen. I'd say keep an eye on what's happening if ever we start to get back under 161 and then 160.40, okay? But we're pretty far away, and we're trading 163s here. I really wouldn't be surprised if there's no surprises on any of the Japanese sessions. I wouldn't be surprised actually if we retest those highs, you know. Yes, Angela, I've seen the mix, and it really turned in a flash, as you say. And you know, I haven't seen the headline, but once it started to take off here, I think one of the reasons I think was the market taking off perhaps a bit of carry trades before the Bank of Japan. But then today we are seeing a continuation of this whole thing. The emerging markets are trading softer. We see it on the dollar rand as well. But I also think we have Banxico the day after tomorrow, Angela, and they are expected to start cutting. So the expectations are for 25 BPs cut. So that may be like your start of the week reduction in everything MEX related. I was short Euro MEX, and I've actually bought. I was fortunate enough to see those lows first. I sold it around here the other day, and then I took 2/3 or so off. And then this morning, looking at the opening, looking where we were, looking at a bit of support around here, I took the rest off as well, and just banked the pips. And now I'm waiting for Banxico to see what to happen, you know. Go somewhere, cutting 25 BPs from 11.25%. It may just have a very temporary impact, but we will see what's going to happen if they hint at the start of finally a cutting, an easing cycle, which the rest of the LATAM central banks are already in, by the way. But Mexico being closer to the US, it may be slightly different story as well. All right, but for the time being, no position there, and I'm watching the game. But if we start to break above 17 in the dollar mix, there could be some sort of acceleration there as well. Okay, up to perhaps 17, 10, 15, who knows. That for the Mexican peso. Yeah, the indices as well, and it's linked to risk, yeah. Dollar rand, we're coming into a bit of an interesting level here, just above 19. We are holding back from it right now, trading 1897. If it goes through here, I think we can have a look at 1930. Been scaling back a little bit on what I bought and looking to reload on any decent dips that we may get, because the South Africa is again struggling with their power supply. Is again, we do have CPI out tomorrow morning, by the way, on in South Africa, so that's going to be an interesting watch. And I'm looking at the time, Ryan. I think that's enough for today. I'm giving it back to you, mate.
Yeah, thank you very much, mate. We'll call it a day for today. Been a busy one. Feel like I've done a day's work already. Mind you, I've been up since 2 o'clock, so yeah, probably have done. Right, have a great day, everybody. Thank, as always, K-Man, for your valued insight. Thank you, everyone, for coming to the Flow Show. Hope you've been trading well over the BOJ, and it's a busy, busy week still to go this week. So trade safe, everybody, and we shall catch you all tomorrow morning. Thank you very much.
Ta-da.